John Mauldin, I know about growth investing and value investing, but what exactly is bullseye investing?
Bullseye investing, what we try to do is actually look at longer term cycles. And markets cycle in what we call secular bear and secular bull cycles. Markets go from high valuations to low valuations back to high valuations over 30, 35-year cycles. Never stops in between before it gets to low. It never stops in between before it gets to high. So, 98, 99, you could start saying, as I did and I was writing, we're getting ready to enter a secular bear cycle. Stocks are going to go sideways to down for the next 10, 15 years. We're now close to the end of that secular bear. It's 2012. We've got, I think, one more recession. We'll get down to valuations that are low, and then we start a 15-year upcycle, 17-year upcycle.
So which stocks or asset classes can bullseye investors make money on right now? What are you targeting?
Well, what you have to recognize is that in a secular bear, you have to be a relative value investor. You just can't buy and hold. So that means you're using some kind of a momentum model, and you have to determine what kind of volatility can I stand. Where's your exit going to be? Where's your entry point going to be? And you're using a basic moving average trend model, and you're not looking to stay in all the time. You're not going to catch the exact bottoms. You're not going to catch the exact tops. You're just trying to pull something out of the middle. In secular bulls, you start at the bottom, you shut your eyes, and you ride it up.
All right, so which sectors or stocks are you riding right now?
Well, you look where the momentum is. We've been looking at energy. You're probably beginning to ride gold down now. There's always movement, and that's what you're trying to do, is catch that movement. So today, I'm a little bit more in absolute returns. I'm trying to get from where we are today to another 2 or 3 years and have as much equity, have as much cash as I can, so that I can become far more aggressive at that point.
And do you listen to Wall Street earnings calls, quarterly calls? Do you pay attention to this? Should bullseye investors pay attention to what Wall Street is saying?
Only as a counter indicator. Wall Street analysts as a group, as a herd, are notoriously wrong. They're momentum players. If you want to know what Wall Street analysts are going to predict, look at the last 12 months. They're going to predict more of the same. It's terrible. I mean, you can actually look at what Wall Street analysts predict, take the opposite, that's all you have to do, figure out some reason why they're wrong, and then go play golf for the other 29 days. And you will be far more accurate than the people who are actually trying.
All right, let's take a stock like Apple, which had a tremendous run over the last decade. How would you apply your bullseye investing to a stock like that?
Well, if you were trying to apply it to a single stock, you just play it as a momentum stock. There are times when it's gone down, you're out. When it turns back up, and you take the momentum number that you're comfortable with playing. If you can take a 20% downdraft, that's where you set it. If you can take a 10% downdraft because you're less risky, that's where you set it. It's all about you personally. Now, if you wanted to buy Apple and not worry about it, you can do that. I've got some stocks, the small micro-cap biotech stocks that I'm buying because I'm buying them for 10 years. I'm buying for the long term because I think they're going to have large movements. I'm not worried about a 20% down or a 50% down. In fact, a 50% down becomes an opportunity because I'm convinced about the stock, about the company, and I'm not worried so much about investing for a return.